Hello, my name is Simon Zutshi. In this video, I'm going to talk about the capital gains tax changes in 2021. This is a really important video. If you're a property investor, you need to understand what could potentially happen to capital gains tax because it might influence the way you are going to invest. So my name is Simon Zutshi. I've been investing in property since 1995. I've been teaching people like you how to be successful investors since 2003. I'm the author of Property Magic, the Amazon #1 property bestseller. And also I'm the founder of the Property Investors Network with 50 network meetings all over the UK. Now, obviously, with all these network meetings around UK, we have our eyes and ears plugged into what's happening at the grassroots level all around the UK. And believe me, there's a lot of concern about capital gains tax changes in 2021. The Chancellor has been talking about how there might be changes. Now, why is this happening? Well, if you think about it, the government in 2020 has spent a huge amount of money supporting the economy. They introduced the furlough scheme where they said to employers, rather than making people unemployed, if you don't need them right now because of the recession and the pandemic, just send them home. You can pay them 80%, they can't do any work, but we will help you fund that salary. And it was a great scheme brought in to stop millions of people suddenly losing their jobs and going on to the unemployment benefit. It was initially supposed to finish, it was supposed to be for 3 months, then extended to October 2020, and then they're talking about now going out to probably March. And I think they've done that because, if they ended it in October, millions of people in November would have got made unemployed. It would have been very bad for the spirit and the morale of the country. It would have completely ruined the last 2 years of 2 months in the economy. So this is a massive amount of money that's been spent. Also, they've got money they put out through bounce back loans and civil loans to help support businesses and all the other schemes they put in there. This money has to be paid for. It's not a gift. It's got to be bought back. So there's no doubt in my mind, and the Chancellor's made it very clear that somehow this has all got to be reckoned for. It's got to be paid for. They've talked about maybe changing the corporation tax. That's the tax when you have a business, it's the tax you pay on your profits. They've talked about maybe changing income tax and maybe changing capital gains tax. Now, any government is going to need to cover this. If it was the other parties, they'd have to do the same thing. But the Conservative Party, normally they're supposed to be for business and free enterprise, and they want to stimulate the economy by getting entrepreneurs to create businesses, to create jobs, and thus stimulate the economy. And that's what the Conservative Party have always been about. Now, unfortunately, it looks like many of the policies the Conservative Party are bringing in are not really supporting the entrepreneurs and business owners of this country. And that's a real shame because I think that's one of the ways the UK could get out of the recession by helping entrepreneurs to be creative, create businesses and thus create jobs. But they're not exactly being incentivized to do that. And also property investors, I think, are often seen as a target. How can we tax people who are seen as making money and maybe not very popular in society? So a lot of people who are tenants don't like the fact that landlords have got all this property and making all this money. And they kind of fail to miss the fact that we as property investors are providing much needed accommodation, hopefully good quality accommodation at affordable rates for people who cannot afford to buy their own property. If there were no private landlords in this country, the country would be in a real problem because there just would not be enough rental accommodation. And rents would actually be much, much higher than they are right now. But the government, they need to get money in. And so there's been a report, and it's only a proposal at the moment, but it's made massive headlines recently that potentially capital gains tax could double for investors. So what I want to do is look at what exactly are the tax situations right now, how are you affected, whether you own property in your own name or in a company structure. And let's look at it right now and understand that, and then we can see what the impacts might be in the future. There's no point worrying about things that aren't in place now. Very often governments talk about things, but actually they don't put them into practice. They only talk about things as rumors, and I think there's a lot of hype in the media and the press that get people worked up. So you've got to be very careful not to get taken down by negativity in the media. So let's talk very practically about capital gains tax and income tax. So if you own property in your own name, and that always was the most tax efficient way of doing it, then you On income that comes in, you pay income tax. Okay, so if you own property in your own name and you're renting it out, the profit you make is affected by income tax. Now, in April 2017, the government introduced Section 24, which changes the way that they calculate the tax on rental profit. What it fundamentally means is if you own property in your own name, which most people do, and you're a high rate taxpayer and you've got mortgages, you're going to pay a lot more tax on your property portfolio. So for this reason, a number of people have been moving to companies. If you own property within a company, you pay corporation tax. That's the tax that businesses pay. And currently, at the time of filming this, it's 19%, but I fully expect the government will increase that tax so they need to get some money back for all the money they spent during 2020 and the pandemic. So, owning your own name, you pay income tax. Owning a company name, you pay corporation tax. Now, what about capital gains tax? And this is what people have been saying could well double. So capital gains tax is a tax you pay when you own property in your own name and you have a property that's not your main residence and you rent that property out and then eventually you decide to sell that property. So let's say you buy the property, you bought it years and years ago and you bought it for £100,000 and then it's now worth £300,000. So it's kind of doubled in value and almost doubled again, maybe over a 15 or 20 year period. And that's generally what happens in property, which is why it's so good to have property. That increase in value, if you own the asset in your own name, then when you sell it, you have to pay capital gains tax on the profit. Now let's just be really clear exactly what is the profit. Well, you take the purchase price less, the sales price less the purchase price, and then you can offset any buying costs and selling costs and any capital improvements you've made to the property. So all the things you spent on it to increase the value, you can deduct all of those. What's left over is the profit on which you have to pay your capital gains tax. Very often people make a mistake. They think it's all about the amount of money they take out of the property. Let's say a property is worth 300,000 and you've got a mortgage of 200. So when you sell it, you're going to get a profit of 100,000 because you paid off the mortgage. People think that's what you pay the tax on, but it's not based on the mortgage amount. It's what you bought the property for in the first place. So it's really important you understand that. Now, what that means is that when you look at how much your mortgage is and how much actual cash you're going to get out, if you've owned a property for a very long time and you've had really good growth, it might be that actually when you sell the property, the difference between the mortgage and the value will give you a certain amount of money. If you've had really good growth, it might be that that money might not be enough to pay all of the tax. And so some people, if they had really good growth, it's not worth them ever selling that property. They just need to hold on to that forever. Now, here's the interesting thing. If you never sell a property, you never have to pay capital gains tax on it. And the reason is because rather than paying capital gains tax when you die, you pay inheritance tax, IHT. Now, at the moment, as I film this video, IHT is at 40%, and that's higher than capital gains tax. So when you die, you get taxed at 40% rather than capital gains tax. But if capital gains tax does increase in value, it might get close to that 40% level for higher rate taxpayers. So again, that's something to look for in the future. But the point is, if you own property in your own name, if it goes up in value, oh, by the way, this is if it's not your own home. If it's your residence where you live, you can sell it after a gain and there's no tax to pay. That's at the moment, but you know what? The government might change that and they might start taxing you on growth on your own home. That would be a real shame because that's how people move up the ladder to bigger and bigger houses. They have some growth on their property, they sell the property and then step up to a bigger one. But we're going to have to look and see what happens. And again, don't worry about things that you can't control. Don't worry about things that might or might not happen. Just focus when things do happen, then you can make your investment decisions based on that. So the capital gain is capital gains tax is what you pay on the gain from when you bought it to when you sell it on a rental property. Now, each year at the moment, there is a personal capital gains tax allowance. So for the first £12,300 of capital gain, you can take that money completely tax-free. If you own the property with a partner, like a husband or wife, you both get that personal capital gains tax allowance. So in other words, the first £24,600 pounds of profit you can get tax-free. Bearing that in mind, there are many investors who actually sell one property every single year as a strategy to take a hold of the tax-free money, 24,600 tax-free, thank you very much. Then they take the profit, reinvest it into another better property. I do that because, I've been investing for 25 years. Over that 25 years, I bought some properties which at the time, knowing what I knew at that time, they seemed like a good idea. But knowing what I know now, some of those properties I would not buy again. And so I'm selling some of the properties that are not such good ones, taking the profit, taking the tax-free money and reinvesting it in better properties. So I'm keeping the size of my portfolio about the same, but just making it better and better every year. If I just sold one every year, eventually I'd run out of properties and that's no good. So I think a strategy of selling one a year is a really good thing to do. There's talk of this personal capital gains tax allowance that might be changed, and maybe they might get rid of the partner where you could do it with the partner as well. So this is one of the things they've talked about again. It means when you sell a property, you're going to make you're going to have a lot more tax to pay because you may not have such a capital gains tax allowance. But as I said before, you only pay this tax when you actually sell the property. If you don't sell the property, you don't pay the tax. Now, if you've got the property within a company, it's corporation tax you're going to pay. You don't pay capital gains tax, and that's currently the 19%. Again, that amount might change, but we have to look. I think it's really important to keep up to date on this kind of information. I do regular updates on this YouTube channel. If you like this video, found it useful, please put a comment below. I'd love to come back and answer your questions for you. And also subscribe to the channel to make sure you get all the updates about what's happening in the property market. There's a whole load of videos on this channel. I really encourage you to watch them and really make sure you understand about how you can be a successful property investor. Thanks for watching the video. Click the like button, subscribe. I look forward to seeing you on the next video. I hope you've enjoyed that video. I've set up the next video I think you should watch, having just seen this one. Click on the link now to watch that video. And also, if you click on the link just below here, you can access our Property Investor Network meetings. Come to your very first meeting as my guest. Normally £20, but click on the link below, come to your first one just to check it out as my guest at no cost.